The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. If you miss an episode, you can always catch me on Spotify or Apple, or, live stream me if you're not in the area. And we'd love to hear from you. And I'd love to hear your comments and questions. And that's what we're all about. So when we talk about our code, we talk about choice, organization, direction, and education. And we help hundreds of advisors across the country with their needs with life insurance, annuities, disability, long-term care, and, if need be, life settlements, where we actually sell policies. We have attorneys and accountants that reach out to us all the time for specific problems, and we also, as I said, help other agents when they have issues and clients that have needs in life insurance. And today I want to talk about, I've talked about this topic in the past, but I've been working with a client who, he's 50-something years old, and he's terminally ill. He came to me through an attorney, and basically what happened is he bought a term product from Prime America 17 years ago exactly. I know that because there's some things with this term. So Prime America, and I don't want to bash the company per se, but they preach buy term, invest the difference. To be candid with you, Susie Orman preaches the same thing, and it doesn't work in a lot of cases. Here's a situation where he bought term, and he didn't invest the difference. He invested some, but he's gone through all that money, and now he's in his 50s and running through money, and he does have this term policy. And we'll work with it. We'll see what we got. So in investigating this policy and getting a copy of it and investigating further, I found out that it was he bought it 17 years ago, and reading through the nuts and bolts of this policy, it was a $500,000 policy, which was termed for 30 years, and he had a term rider on it, which you can put on some policies, and a little different than most policies, which would give him another $500,000 for 20 years. So combined today, if something happened to him today, it's $1 million death benefit. Now, we reached out to his rep and went over this policy with him. He's on disability waiver, meaning that his rep knows that he's terminally ill. They submitted a claim to the company a year ago, and he's not paying for his policy right now, which is great. He doesn't have to pay for it. His rep told him that in 3 years, that 20-year term policy will drop. So they'll only, if he survives 3 years, he'll only have $500,000. He's wrong. What the rep didn't know, and this is the problem, when they train these people to sell these policies, all they teach them is term insurance, invested. They don't teach them all the clauses inside their own policy. So I read through the policy in fine detail, and I asked a question of the carrier. First off, in their policy, it says after 5 years, we have a conversion privilege to something permanent. The rep never discussed that with him, because if he had a conversion privilege, they would have to convert it without any underwriting to something permanent, and he wouldn't have to pay for it. Now, according to the rep, they don't have a permanent product. They do have a permanent product. It's permanent term. It doesn't build any cash, but they do have a permanent product. It can be made permanent. So the rep was incorrect. And we called and called. Finally, I called the company direct and said, yeah, we have something, but not that he needs it. But I'm just saying it would be nice to know that 2 years ago or a year ago when he did this. Secondly, I read through it, and the rep never discussed with him, there is a terminal illness waiver in that, meaning that if you're terminally ill, they'll pay him up to $250,000 today for his policy. Now, he's out of money, and he's looking for options right now. Now, yes, if he waits, there's $1 million at the end of the rainbow for his family. But I don't think he can make it to the end of the rainbow without living. So there is a rider there. Now, typically, he came to me because he wants to sell the policy. Now, if we sell the policy, we hope to get much more than $250,000. But remember, he's in his 50s, not 60s, 70s, or 80s. However, he is terminal. So it is sellable. There's a lot of points I want to make here. One, buy, sell, invest the difference, buy term, invest the difference does not work as a strategy for most people. It can work. For most people, it is not a good strategy because, A, they may or may not be able to convert whatever term they bought, and they may be sick later on, like in his situation. In his situation, it's dire. And B, rarely can you invest enough money to equal $1 million when his policy only costs $1,000 a year or $2,000 a year. Even though he's not paying for it now, he was only paying $2,000 or $3,000 a year. So how much do you have to invest to get that $1 million for your family? Maybe he's invested $17,000 in this whole thing or $30,000, which is not a big amount considering $1 million at the end of the rainbow. I mean, that's the value of insurance. It's a huge value. But the value comes at a price, which is why I advocate for getting permanent insurance. And Susie Orman will say this all day long, and she's wrong. 100% wrong. If you like Susie Orman, I've got nothing against Susie Orman except she's not telling you the right thing. Susie Orman does a lot of good things. She talks about planning and getting yourself together and paying down your debt and very good basic information. But that strategy rarely works. That buy term, invest the difference. That's all they teach these people at Prime America, unfortunately. And unfortunately, many of the Prime America reps only know that. And many of them are mortgage people or have other occupations, and this is like a part-time gig for them to do the insurance. And so you really need insurance professionals when you're buying insurance. You really need investment professionals when you're buying investments. It's a big case in point. Now, I know one of my producers' father worked for that company. He got very angry at me when I first brought this up 3 years ago. So his father put him through college. He worked for Prime America, and he took offense to what I was saying. Many of these other insurance, and I'm not here to pick on Prime America or Susie Orman. What I'm saying is you really need expertise in buying insurance. Not all term insurance is created equal. Now, this particular term insurance policy did have some caveats to it that I discovered, and I rarely run across it because only these Prime America reps can sell this one particular product. So whoever sold it to him, the guy did put in some good caveats, didn't understand them 17 years later, but there were some caveats to help this guy in his policy. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. We'll be right back in a minute. If you have any questions, the best way to reach out to me is 631-647-4694. We'll be right back. Thank you. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and before the break, we were talking about a particular term policy that we were working on, and it brings me to the point, not all term insurance is created equal. It's promoted on the radio, on TV, as a commodity. Can I convert it? Does it have a terminal illness rider? Can it do this? But there's another element to even the basic term insurance that you need to understand. One of it is we have companies merging and going out of business and going all over the place right now. The latest merger is Corebridge and Equitable. Now, you may have never heard of Corebridge. Corebridge was the United States Life Insurance Company, which was owned by American General, or AIG, and then it recently, probably a year ago, United States Life, which was a division of AIG, spun off into Corebridge, and now it's merging with Equitable, which, by the way, last year, Equitable pulled out of the market for new life insurance sales completely. They only kept the annuities. And now the two companies are merging, and now your Corebridge policies will now be called, from what I'm told, Equitable, unless they change their mind. And if you bought a term policy with United States Life 20 years ago, or a permanent policy, you really got to be careful and mindful of what it is you have. So if you have a Corebridge policy or a United States Life policy, and you haven't looked at it for a while, and the name changes, and you want to know who to call or what to do, first off, call me. This is what's happening in the industry. Now, I don't know what you can convert that to in the future. I know what you can do now. And this is why you have to constantly review your policies, because it's changing very quickly. The landscape of life insurance, like many things, is changing very quickly. So Corebridge just became Corebridge, I don't know, a year or 2 years ago. And now all of a sudden, which was United States Life Insurance Company for years, which is an AIG company or American General company. By the way, American General also owned several other companies. They owned First and Valak. They owned First Sun. All these companies are now under the, I believe, Corebridge umbrella. And now that's going to change to the Equitable umbrella. So if you have a policy sitting there, or your parents have a policy, you better know what you have, or where to go, or who to call. That's very important. Now, we had another company in the market at one time. It was called Reliastar. That became a company called ING. Everybody knew that name. ING became Voya. And Voya is now Resolution Life, which is a reinsurance company. And if you want to service that contract, you got to call the Philippines or Malaysia or somewhere, and then maybe they can help you with that contract. It's very bad. You need a rep. You need a representative to help you manage your policy. If you have a claim, if you become disabled, and you don't have to pay for your policy anymore, which reminds me, great story, like the one I started with. Several years back, somebody had a Reliastar policy, which became ING, and he got a letter in the mail, and he had a term policy for like 15 years. It says my disability waiver, he says, I've been disabled for 10 years. he says, what am I paying for? And the amazing thing was, I went back to the insurance company at the time and proved to them he's been disabled for 10 years. And guess what? They cut him a check for $20,000. All the premiums he paid for those 10 years of date of disability, and never charged him again for his policy. And he died 6 months later, and his family got the full $100,000, plus he got another $20,000. What a home run for his family. And I'm very happy. What a great story for me. I mean, to me, this helping somebody makes me feel good, okay? That I was able to do that for him, and he had no idea, because whoever agent he had, or he never contacted, he bought a term policy. And this is what happens when you buy online or you buy from somebody and you never see him again. You got to know what the clauses are and how to put them in play. This is why you reach out to people. I wanted to tell that story because I did such a great thing for that family. And when I do good things for people, it makes me feel good. That's why I do what I do. Honestly, that's what keeps me in the game. So you need to review your contracts. So companies are changing. They are leaving the market. They're in the market. The products change. We had a whole bunch of MetLife policies that we had at one point, and we liked to sell MetLife because their term insurance would convert to either your universal life insurance, which was less expensive than their whole life insurance, but you'd have that option. Their whole life insurance was a good cash-producing whole life, and their universal life was just a good, inexpensive protection product. So one was really designed for accumulation, one was designed for protection. Well, MetLife left the life insurance business. They're still around, but not in individual life insurance. They left the business. And now you can only convert to the most expensive whole life they have, because they're assuming if you're going to convert this policy, you bet you're probably very sick. So even though that you were in the best shape of your life when you were 20 and now you're 40 and you want to convert it, it's going to be extremely expensive, because they're assuming that you're dying and they're going to charge you for it. Because yes, there's a conversion privilege, but converting to what is the question? So just because a policy has a conversion privilege, some of these term policies do, some don't, by the way. Most do. You need to know what you're able to convert it to for your family if you're in a position where you have to buy a lot of term insurance. I'm not saying term insurance is bad. It's a great placeholder. It's a great situation. Listen, it's going to save this guy's life that I talked about earlier in the program, because in his 51, 52, whatever his age is, his family is going to receive $1 million, and he's paid next to nothing for it because he's been disabled and had this waiver. He's not paying for it. And he paid a few thousand up front, and they're going to get $1 million. So I'm not saying it's not valuable. What I'm saying is there's different products and different features in every product, and you might have to pay a little more, but the returns are humongous for getting the right thing. So that's the whole deal with not all term is created equal. Now, we're running out of time, but I did have a bunch of people call me and stop in about something I talked about last week. So I might want to review it. And I talked about index products, index annuities, and index life. And basically, an indexing strategy works like a set of stairs, so that it bases the fixed interest on the market. So if the S&P goes up, let's say, you get to participate in that. But if it goes down, you get zero return. So your return ends up looking like a step. So it goes up, maybe it levels, it goes up, maybe it levels, or it just keeps going up. And that's why indexing inside your life policy or an annuity can be a great feature with no risk of you losing your principal. You've been listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Best way to reach me, 631-647-4694. Stop in and see me. My office is in Patchogue. My appointment schedule is very busy, so please call in advance, and we're happy to help you with any of your insurance needs. Have a great weekend, everybody. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.